What's up, everyone, and welcome to another cryptocurrency market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, Ethereum, and others. Before we dive into the analysis, just a quick reminder that everything on this channel is for educational purposes only and is not intended as financial advice. All right, so we're going to be looking at Bitcoin as well as Ethereum today. So let's start off here with Bitcoin and try and get through it relatively quickly. So on the monthly time frame for Bitcoin, we really have this equilibrium pattern right here playing out, which is where we have a series of lower highs and higher lows before eventually we either break out to the upside or we break out to the downside. But whatever way we do end up breaking on this pattern, we're going to see likely some significant either upside or downside follow through. So as we look at this chart on this rise in price, we can see we've already risen from our low approximately about 85%. So for us to go higher than there is unlikely from this high that we set. Well, not the high that we've set, but this high in September. And the reason why I say we haven't set the high yet is because we haven't broken the candle's low from that month here in the month of October. Since this monthly candle has opened in the month of October, we've traded up since that point. Very good news for the bulls if we want to see bullish continuation. Not good for the bears who are likely going short on this upper wick here. So we'll see if we can get up higher than this wick in the coming days and weeks to potentially go a bit higher before forming our lower high. I still do think that we are going to form a lower high somewhere below this one here from April, right around 65K. It's just a matter of where that's going to be, if it was the high here in September, or if we're going to go up here in the month of October and November and see a high maybe closer to 58K before coming down to form our higher low, which eventually is inevitable. We will have to come down and form a higher low at some point in time. So that's what I'm looking at on the monthly time frame. If we go down to the weekly time frame, if I could actually navigate to it here. From a weekly perspective, we have set a higher low right here on September 20th, and now we're trading up from that point. Now, the magnitude of this move down was about 25%. So now for us to come up and form a higher high on the first go, we'll need to appreciate about 33.5%. Now, it's possible, and we've already made a significant move in that direction, but it doesn't necessarily mean that we're going to get above 52,920 sometime this week, given that that's a pretty significant ways to go. This last week's candle gave us a pretty good idea that we have a good chance of making it higher this week, and that's what we've seen since this candle has opened. We've seen price appreciate somewhat, but we need to keep in mind that we still might form a lower high somewhere below this high here at 52,920. If we do go above this high, I'm going to be watching for a potential what's called a swing failure pattern, which is where the price wicks above this key high, meaning that it trades above it but then closes back below it, and then we see a drawdown thereafter. So I want to see, if we're bullish, we want to see a rise above this key high here and a candle close above it. So that will give us good indication that this was not just a liquidity run, this rise in price, up to grab the stop losses above this high, but is actually just bullish price action, and we're going to continue higher from here. So you can see right now we're trading at about 50K, which is right around the price that I said in either this week or this week would be a pretty likely zone for us to stop and come down to form a higher low in the coming weeks. So we'll see how price reacts to this 50K big figure level as well. But right now looks really good for the bulls in terms of these lower wicks here, and then bullish continuation here. We'll have to see how this weekly candle closes for proper direction. If we're looking for an opportunity here for a trade, we can go for a top fishing play if we think that we're going to form a lower high below this high from September 6th, we can go short somewhere either here or anywhere below that with our stop loss above that key high. And for people that are doing that, it's important to keep in mind that the stop losses above here are pooling up for people that are taking that trade. So if we do go above this high, that's could potentially lead to a pretty significant rise in price as people get stopped out of their shorts and are forced to buy back their positions, adding to the buying pressure in Bitcoin's price. So if we go to the 3-day time frame, we can see that we're trading above this gray resistance level, which is very significant. And if we get 2 3-day candle closes above this level, we will see this level turn into support and potentially see a reaction like this, but on the bull side. So that's going to be a key level that I'm watching for on the 3-day time frame. And that's from our bull trend here, where we had a low, high, higher low, and then higher high pattern, which is the 4-step pattern that we need to confirm a bull trend. So that is the pattern that leads to this level being a support, the last down candle, the last area where people were selling their Bitcoin before the bull trend got confirmed here. Now, once we closed below it here, 2 candle closes below it and invalidated it as support, it turned into resistance. So we see that resistance here and we get a big drawdown. We come back into it here, but price action seems to just completely ignore this level and we are pushing right through it just like butter. So if we close 2 candlesticks above it here on the 3-day time frame, that will turn into support for us. A couple things on the daily time frame. Ichimoku cloud is looking like it's about to set up for actually the most bullish scenario that it can be in. Right now we have everything set up the way that we need it to. We just need the blue Tenkin line to cross above the Kijun, the red line, and we'll be in the same position that we were back in this kind of range where the price is above the Tenkin and the Kijun. The cloud is green and the Tenkin is above the Kijun, and all of that is above the cloud. So when we're in that position, this trending indicator is telling us that we're in the most bullish trend position that we can be in. And the way we can play this is we can buy as soon as this scenario becomes the case, which is down here around October 17th. And then we hold until we get a candle close below the Kijun, the red line. And we can add to our position whenever we touch the Kijun. So here was an opportunity to add. Here's another one. Here's another one. And then eventually right here, you can see here's another one. We bounce a little bit. But then right here on April 21st, we close. Same exact situation on the bear side. As soon as this becomes valid from the bearish perspective, you can see when the cloud is red, Tenkin below the Kijun, all of that scenario, that is when we go short. So the first scenario where that was the case, where the price was below the Tenkin, was right here. And so we can go short here, and you can see that as soon as we would have went short there, it was, only a matter of time before we had about a 20% decline in price a few days later. So if we end up seeing this flip where this blue line crosses above the red, and we're in this scenario, that is a position I will look to go long on and hold for an extended period of time. From a super guppy perspective, another trending indicator, you can see we've flipped it back to being green here after a period of kind of choppiness and gray after we validated it as a bull trend here. So very good news for the bulls to see this flip back to being green. So these green EMAs will once again be a buying spot for me if we come back into these in the coming weeks and days. So that's Bitcoin. Pretty much not much to look at on the lower time frame, so we'll just keep it at that. If we go over to Ethereum and we look at this from a monthly perspective, we can see that from a monthly perspective, we're in the overbought territory for the RSI, so we need to keep that in mind. Obviously, when you're in a bull market, things heat up and you stay in the above average overbought territory here for the RSI, and you can see we've been in that territory since January of 2021. So pretty much the entire year we've been overbought. We came down, we formed a higher low, and now we came up, and it looks like we might form a lower high. The way we would invalidate that is if we did not go below this candle's low here, right around 26.52 and instead traded up and went above this key high right here. If we did that, then that would invalidate this as a bearish candlestick and a potential high, and we would continue the price action higher. If we go to the weekly time frame, we can see that Ethereum has drawn down from its high that it set here, its local high, down about 34%, so even more than Bitcoin. So now, if we look at this, for us to go above that high and form a higher high, we'd need to appreciate about 52%. It's not impossible for that to happen, but it's unlikely. So we need to consider that fact as we look at the weekly time frame and see that where we think the short opportunity is. Obviously it can be anywhere, above this previously weekly high that we had here at 34.88. So anywhere above that could be a potential short opportunity. I'm going to be looking at the volume profile for this week to see where that volume candle closes, because we just had our first green week after 3 weeks of red. So if we see increasing bull volume, we could see over the next week after this week continuation. If we see declining bull volume or red volume, our lower high will likely have been set. If we look at this from a 2-day perspective, we can see our main resistance zone is this white candle right here, and this is from our bear trend right here. So we have high, low, lower high, and then lower low right here, with both of these candles closing below this key low right here. So once that happens, this white candle ends up being our resistance zone for price. You can see that we have some declining bull volume coming into this zone. So it'll be interesting to see how this candle closes in 10 hours for Ethereum. If we end up breaking out to the upside and closing with a good looking candle with a short upper wick, or if we trade down below and start to look like we are forming either a doji candle or a bearish reversal candlestick, where we'll see us come down to form likely a higher low above this previous low we set here at 26.52, because we've already risen so much. So there's really two trade opportunities here. There's the short opportunity here where you think we are going to stop on this rise in price, considering we've already risen about 31%. We have declining bull volume, and we also have the resistance level right here that is being tested for the first time. So those are three areas of confluence for a potential short opportunity, where you could put your stop loss above this key high right here from September 16th. And then the other opportunity is when we come down to form that higher low, which we likely will form because we've risen so much. That will be an area to potentially buy for the next increase in price that we see from Ethereum. So pretty simple there. If we look at this from a daily perspective, we can see our other resistance level is from back here. This is from our all-time high zone, which is right here. So we had this all-time high, we came down, we formed a low, come up, form a lower high in comparison to this one, and then we form a lower low. So once we do that, that area becomes resistance. You can see we came into it right here and had a very strong rejection from that zone, and we haven't tested it since. So if we come back into the zone, which goes from about 3,700 up to about 4,200, that's going to be an area for area of resistance for price. And if we end up getting two candle closes above that at some point in time on the daily time frame, that will turn into a support zone for price. From an Ichimoku cloud perspective, we are setting up very similar to Bitcoin, where we could see the Tenkin, the blue line, cross above the red. And if we do, most bullish scenario for ETH as well, that's another buying signal for this indicator. And we could see that trend really accelerate through this red resistance level to higher highs and maybe new all-time highs as well. From a super guppy perspective, very similar to Bitcoin, we had this green established area to buy. We can see we had a bounce from that. We went below it, had a period of gray, and then we came above that, and now we formed a low right here, a higher low in comparison to our previous one. And now we have flipped these to be green once again. So these green EMAs what are known as the investor EMAs, the longer term EMAs, will be the area that I will look to buy Ethereum back if we come back into those zones in the coming days. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrencies and blockchain technology. And leave a comment down below for future content that you would like us to release around cryptocurrencies and the cryptocurrency economy. And if you haven't already, check out our beginner technical analysis course that we released on lutheria.com. This is where you can learn all of the fundamental elements of tactical analysis to get started making more informed buying and selling decisions on your favorite crypto assets. You'll learn everything from bull and bear trends to the bulls and the bears, to how to read candlesticks, how to read technical indicators, how to read volume, and a ton of other stuff as well. So check that out. You can get 20% off using the link in the description below. And until next time, onward and upward.